Hello traders, welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello traders, Bill Duryea here with Follow the Bots. Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Wednesday, September 18th, 2013. The broad benchmark S&P 500 index broke out above its prior multi-year high at 1709 and traded up to a new multi-year high at or near 1730. After auctioning back up into the upper trade cluster above 1675, last week the S&P consolidated at or near 1690. During Sunday's Globex session, the S&P gapped above its prior weekly close as it auctioned up to retest the multi-year high ahead of this week's FOMC session, as we've been commenting and preparing our listeners for the potential outcome that might develop following today's Federal Reserve's forward guidance. We noted that in the event the Fed elected to maintain its extraordinary, unconventional, accommodative monetary policy, the probability then was the S&P would break out above the multi-year high and auction up to a new multi-year high. Indeed, at today's press conference, Fed Chairman Bernanke announced that the Fed's accommodative policy would remain unchanged. There would be no reduction in the $85 billion a month bond purchasing program, nor would there be any adjustment to interest rates. The Fed vowed it will maintain the policy into the future. There was no specific timeline given for when the market could expect any cutbacks in the Fed's bond purchasing program, and Chairman Bernanke explained that future decisions to adjust the monetary policy were dependent upon positive economic data reflecting a sustainable recovery for the U.S. economy. Following last week's gap above the prior high, S&P futures traded up to the previous multi-year high during Sunday's Globex session. Following the initial retracement to the multi-year high, there was a modest pullback down to 1688. The market failed to trade back and fill the gap at last Friday's close, nor did the S&P pull back to retest the prior high. After the modest pullback, the S&P auctioned back up at or near the multi-year high during the overnight session. At today's open, price pulled back modestly to 1694, and the market was relatively flat until the FOMC announcement. Just before the Fed policy was made public, S&P futures had rallied up off of the 1694 price level and traded back up at or near yesterday's close. The chart that I'm displaying here is a range chart. It shows the market development during today's FOMC session. Each bar sample on this chart is 3.5 points. There is no time associated with any of the bars. On the bottom of the chart, I've indicated the time in this box. As you can see, just prior to the FOMC announcement, the S&P had auctioned up off the 1694 low and traded back up to yesterday's close. As soon as the announcement was made public, the S&P auctioned up exponentially above the prior multi-year high at 1705 and traded up to 1713, today's maximum likelihood expectation target. There was a minor pullback to the prior multi-year high, the breakout point of the new developing trading range. After pulling back at or near 1706, the rally continued with the S&P auctioning up to 1723, today's extreme price excursion target. The exponential nature of today's rally suggests that today's high may prove to be only a temporary stopping point. It is possible that the S&P will continue auctioning higher, fueled by the continued Fed stimulus. The current longer-term upside target is now at 1750. Coming into tomorrow's session, the minor support pullback level is down at 1712. The key pullback target is down at the prior multi-year high, the breakout point at 1705. For a more detailed look at the developments that took place during today's FOMC session, we'll focus our attention on the micro 5-tick range chart. This chart shows the overnight development in the S&P futures contract. During yesterday's session, the market consolidated at or near 1697 into the close. Overnight, price auctioned up again at or near the multi-year high, but pulled back below the high at today's open. There was very little participation ahead of the Fed announcement. The market traded in an extremely narrow range, and buying interest waned when the S&P traded up to 1690. Minor selling pressure entered the market ahead of the FOMC announcement, and the S&P pulled back, selling down to 1693. During the pullback to 1693, the high-frequency computerized trading algorithms ceased executing to the sell side. Sell programs waning occurred, and a high-frequency buy surge auctioned the S&P back up towards the opening range. When the Fed's forward guidance was released, price auctioned up to the prior high exponentially. High-frequency initiated buying accompanied the up move until the auction paused at or near 1713. There was a minor pullback to 1706 at or near the prior multi-year high, and the buying interest returned and continued to drive the S&P higher until the auction stalled at 1723. When we talk about market structure, either in the micro context of the intraday development or in the macro context, wherein we look at daily lows and daily highs, areas where price has pulled back and found buying interest, and or auctioned up and encountered selling pressure, are the reference points we use to determine future areas where buying or selling opportunities may occur. In the context of the current market development, should the market pull back off the high, it should be understood that if the market is going to trade down from the high, it is going to be sold down from the high. There is no other mechanism to drive price below the high except selling pressure. Therefore, when the market pulls back to a previous support level, a level where selling ended and buying occurred, There is a specific sequence associated with the pullback that helps the astute observer determine if the sell programs have ceased executing and if the buy programs will commence. Working down through today's trading range, the aggressive pullback entry point is located at 1712, 1713. This reference has two characteristics that the astute observer should take note of. First, it was an earlier high where buying interest stopped and selling pressure dominated. When the market auctioned above the high and pulled back at or near that price level, there was no selling back into the lower portion of the trading range. Instead, the sell programs ceased to execute and the buying interest began. We consider this to be an aggressive pullback target based on its proximity to today's close. The more ideal pullback target would be back at the prior multi-year high, down at or near 1705, 1704. There are several reasons for this being the ideal pullback target that can be described using Bayesian logic. First of all, the speed at which the move occurred. The market rallied up through here in less than a minute, did not provide a great deal of opportunity for traders to decide whether or not to be buyers or sellers. Secondly, at every price level where the market trades, there are buyers and sellers. Indeed, there is not a single price level throughout the trading range where the two counterparties, buyers and sellers, have not exchanged positions. And the fact that it was the previous multi-year high means that there are many sellers who are trapped at that price level. And hence, the term forcing point is used to describe this area of the developing trading range. The Bayesian logic element is that should the market pull back at or near the prior high, previous sellers would want to take that opportunity to get out of their short positions. The only way a seller can exit a short position is to buy it back. Hence, there is the likelihood that on a pullback, the market will pause here as previous sellers buy their positions back. Secondly, having observed the market auction up to 1723, buyers who missed the opportunity to get long will also want to get aboard the trend before the market potentially continues higher. Each morning as the trading day begins, we update our market structure commentary that we post on the website in the form of a daily market briefing. In the daily market briefing, we discuss the activities that developed in the overnight session, and we also go through the potential trade opportunities that might become available during the current session. In the context of the breakout rally that occurred during today's auction, we invite our listeners to log into our website tomorrow morning and listen to our live broadcast and see how we apply this information in real time. That concludes our daily recap for the S&P 500 E-mini for this Wednesday, September 18th. If you would like to follow our real-time commentary, visit us online at www.followthebots.com. Log on and join us some morning at the open.
For more information regarding Zahner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zaner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.